Alright, yes guys, welcome back to another YouTube video. Alright, in today's video, we're gonna be doing a full ICT silver bullet breakdown, alright, including my A+ entry, checklist, and criteria. Gonna be giving you a full risk management plan, and we're also gonna be breaking down this absolute banger of a trade that we took this morning with the live trading VIP signals group. So we're literally gonna be covering everything that you need to know about this specific strategy. I haven't done one of these videos in a while, so we are bringing them back, and we're gonna be doing an updated version of this exact model here. So this will literally be the last video that you'll ever need to watch about the ICT silver bullet, right? We're gonna be going over everything that you can think of, right? So let's jump straight into it. All right, so the first thing that you're really looking for with this strategy is a sweep of liquidity. All right, so this can either be buy side liquidity or sell side liquidity, really doesn't matter. The only thing you do need is a minimum of a 15-minute either high or low. Anything that is lower than the 15-minute time frame, I don't really class as a sweep of liquidity. The minimum time frame here is the 15-minute time frame. So if you see a obvious swing high or obvious swing low that acts as your buy side and sell side liquidity levels, one of these levels gets swept, this will be a sweep of liquidity. All right, even better if we sweep, for example, session liquidity like London highs, London lows, Asia highs, Asia lows. That is going to be 10 times better and more significant compared to just sweeping any 15-minute high or low. All right, the same rule goes for if we sweep, for example, equal highs or equal lows, right? It's going to be high probability. All right, number 2 on the list is a clear displacement. All right, this is very important, guys. Without displacement, this strategy simply won't work for you. All right, you need to see clear displacement, meaning a strong candle closure, either above or below, depending on the direction that you're trading, in order for the setup to be valid. All right, if price just wicks above or wicks below, and there's no significant strong candle closure, I'm not going to count that as a displacement. So let's say, for example, we sweep buy side liquidity. We want to see clear displacement in the opposing direction in order for that trade to be valid. All right, so number 3 is a market structure shift. So usually what happens after a displacement is price will either break below a swing low or above a swing high. Again, depending on the direction you're trading, you'll get some sort of break above or below a significant structure point like a swing high or swing low. Preferably you want to see that candle have a strong closure above or below in order for that market structure shift to be high probability. Let's say we don't close above and we just slightly wick. That's fine as well, as long as there's some sort of fair value gap or imbalance that's created with that displacement. You can potentially take that trade, but it will be low probability compared to if price had a strong closure above that swing high. That's a more significant market structure shift. So preferably what you're looking for is a candle closure above a swing high or below a swing low. All right, and number 4 is of course the fair value gap. So when you get displacement, when you get a market structure shift, the next thing that comes with that is an inefficiency left behind in price. So this is what we call a fair value gap. I'm not going to explain what that is. Most of the people that watch my channel already know the basics and already know what that is. But in brief, okay, all it is a 3 candle formation or pattern, all right, whatever you want to call it. We're not pattern traders on this channel, so I don't really like using that word. But in short, it's literally just an inefficiency that's left behind in price, and usually comes when the market is displacing in the opposing direction and price will leave some sort of gap behind, right? And this is where we look for our entry point. So coming to number 5, that is when you're going to enter. Your entry should be at the fair value gap. So as soon as price taps into that fair value gap, that is your entry. All right, so let's say, for example, you're going short, you're going to enter that fair value gap and keep your stop loss at a swing high and then target the opposing liquidity. Vice versa, if you're going long, as soon as price taps into that bullish fair value gap, you're gonna enter long, stop loss below swing low, and then target the opposing liquidity. All right, so coming to number 6, you wanna have your stop loss either above a swing high or below a swing low. Again, depending on the direction you're trading, the best place to keep your stops is always at some sort of structure point like a swing high or like a swing low. Let's just say, for example, you're risking way too much and you cannot have that stop loss placement. Make sure your stop loss is at least covering the imbalance, all right? Meaning keep your stops above the displacement candles high or below the displacement candles low, right? The displacement candle is the second candle in that 3 candle formation. All right, and number 7, very easy, right? Target the opposing liquidity. So if we've just swept buy side liquidity and we've displaced the opposing direction, what is the next opposing drawn liquidity? It's going to be sell side. So that's going to be your target. All right. And number 8, a very important bullet point is your entry must be inside of that 9:45 to 10:15 a.m. macro. If you get an entry 1 minute before the macro, you're not taking that trade. If you get an entry 1 minute after the macro ends, you're simply not taking that trade, right? End of. These are my rules that I strictly follow, and I've back tested and forward tested, right? I've got a spreadsheet of data of all of my wins and losses that I've taken on live stream using these exact rules. Right? And it clearly works because we've been profitable for the last 2 years now. So please make sure to stick to these rules. Otherwise, the strategy is just not going to work as well as it would if you were to follow this criteria. All right, and number 9, make sure to exit all of your trades before 11 a.m. New York time. So if you still have not hit take profit by 11 a.m., then exit that trade. All right, and lastly, just to add, the silver bullet hour is between the times of 10 a.m. to 11 a.m. New York time. All right, but your entry must be inside of this macro window. But that is the session that you should mark out on your chart. So you're looking for a setup between the times of 10 a.m. to 11 a.m. and you want to get an entry inside of that macro. All right, so hopefully that makes sense. I've tried to break it down as simple and the best way as I possibly can for beginners and also other people to understand. All right, so let's quickly go over the risk management plan and then we'll jump into the trade breakdowns and also show you a few examples. So the maximum risk that you're going to be taking on one single trade is going to be 30 handles on NQ, all right? So we only trade NASDAQ. That is the amount of handles that you should be risking maximum, right? If the trade is 31 handles, 35, you're simply just not gonna take that trade unless it provides you with a valid stop loss. All right, this is another rule that I've made myself that has helped me not blow accounts, all right? And it's helped me manage my risk correctly. So it's also prevented me from over trading and revenge trading. So 3 trades a day maximum, okay? Meaning if you take 2 losses in a row, then you walk away. All right, you're done. The maximum amount of losses that I'm allowed to take in a day with this strategy is 2 losses. If I take 2 losses, that's me done, I'm walking away. However, if I take 1 loss and then 1 break-even trade, I'll allow myself to take that final trade, meaning I'll be taking a total of 3 trades. Whatever happens on that last trade, whether the outcome is a win or a loss, does not matter. 3 trades a day, I'm walking away. That's the risk management plan that you should be following with this strategy. All right, and my final rule here that does help you out a ton and stops you from blowing accounts, okay, if you do not have a buffer on these funded accounts, is if you take a 1% loss, all right, you want to half your risk to 0.5%. If you take a loss again at 0.5%, you want to stay at that risk until you win. Once you have that next win, then and only then you can allow yourself to go back up to 1%. But yeah, anyways guys, that is my A+ criteria for the ICT Silver Bullet. I've given you my full checklist and A+ criteria in order for the trade to be valid. These are the types of things that you are looking for on your chart. And if you do all of that correctly, the only thing that you're missing is the experience, psychology, and risk management. Once you master all of those things, you should be profitable, right? It's totally up to you guys. I can't grab you through the screen and, shake you and tell you, stop taking 10 trades a day, 20 trades a day, and stick to taking 2 trades a day, right? That is totally up to you. I can't stop you from doing that. You need to really sit down and realize whether trading is for you or it isn't, okay? And if it isn't, that's fine. Walk away, go to a different business model. But if it is for you, then start to practice these good habits, all right? And good habits, I mean taking 2 or 3 trades a day maximum and walking away, right? These are the habits that you want to be practicing in order to actually become successful and profitable in this business. If you can't do that, then it's very simple. Trading is just not for you. So yeah, guys, screenshot this, save it for later. That's the risk management plan and the checklist criteria. All right, guys, so now that we've covered all of that, let's break down that A+ trade setup that we took this morning with the live trading signals group. All right, guys, so here is the trade. All right, I'm gonna be explaining my full bias and thought process when I was inside this trade and my thoughts going into the morning. So what was I expecting for the morning session? Well, if we zoom out on the daily time frame, we had this daily fair value gap here, right? I wanted to see price come into that daily fair value gap, sweep the sell side, resting just above it. And then from there, I was looking to take some long positions. So whenever we have sell side resting just a little bit above a higher time frame PDRA, that is very, very high probability. So the fact that we swept sell side liquidity and we also tapped into a daily fair value gap is very high probability, right? That alone is part of the A+ criteria checklist. So definitely keep that in mind. Now, once we were inside of this area, all right, I was waiting for news to get released at 10 a.m. Once news got released and we were still inside of that 9:45 to 10:15 macro, that's when we got the displacement, right? Notice how we swept an additional sell side level here. So internal sell side liquidity had been swept. Then we displaced, we inversed this 1-minute bearish gap. We also broke above this swing high. So we've had the displacement, we've had a sweep of liquidity, we've had a market structure shift. Notice how we didn't actually close above that swing high there. So you could say that is lower probability. However, if you look at the correlating asset, which is S&P 500, ES at the time, it actually closed above, meaning we had that strong bullish closure and a very significant market structure shift above that swing high. So at that point, I literally just waited for an entry or a retracement back into this inefficiency to take my entry. Once price tapped that fair value gap, I decided to enter long. Since I could not have my stops at the swing low because it was too much risk for me, and the maximum amount of risk is 30 handles, I simply just put the stop at a fixed stop loss of 30 handles, right? It's covering the imbalance. As long as the stop loss is covering the inefficiency, it's a valid stop loss, right? Yes, it is better if it's below a displacement candle's low or a swing low, but if you cannot do that, then this is the next alternative. So anyways, we took our entry at that fair value gap, kept our stop loss below the inefficiency. Once price took out this recent swing high, I decided to move my stops to that swing low. So I always like to trail my stops and keep my stops at valid structure points. So if you were to put your stops at break even in this case, you would have been stopped out. I don't like to do that. I always move my stops to a swing low. So move my stops to this low. We came very close. We did not get stopped out. Price ended up pushing higher. Took out this internal buy side liquidity level here for around 60 handles. All right, I decided to take some of my position off. This is a good area to take partials, right? It's also 50% of this price range. Remember guys, anything that's inside of the range, meaning internal, that is where you take partial profits. Anything outside of the range, meaning external, that's where you close your full position. So this buy side liquidity level here would be classified as external liquidity. So anyways, once TP1 got smashed, I closed some of my position, trailed my stops again to the swing low. Price ended up pushing higher, and I just kept on trailing my stops. Okay, so once that next high gets broken, I trail my stops to that swing low. Same thing again. Once that next high gets broken, trail stops again to the next swing low. And eventually we ended up hitting TP for over 147.25 handles on NASDAQ, which is absolutely insane. One of my biggest trades that I've ever hit on live stream so far. So very excited about that. And I closed my full position at this high here. So a ton of people inside of the live trading signals group made a lot of money on this trade just simply by following the signal. All right, if you guys want to watch that live stream, it is public on YouTube. I do upload them for educational purposes only. So if you don't want to check that out, make sure to check it out. If you're actually looking to elevate your trading and get your trading to that next level, then make sure to check out all the links in the description. Come watch me trade live. I trade live literally every single morning, guys, at 9:30 a.m. New York time. Right, you can copy my exact entries and exits. Ask me any question you like. So yeah, if that does sound interesting to you, definitely go check that out. If you're looking for something more personal and you're actually looking for one-on-one coaching sessions, you're looking for actual mentorship, I also have that. Make sure to fill out the application form in the description below. See if you qualify for the program. If you are approved, then it will allow you to schedule a call with me personally and my team where we can discuss a few details about the mentorship, see where you're currently at, and tailor that mentorship specifically and personally towards your specific struggles. That way you're getting the most value out of that mentorship and we're actually solving your issues that you're currently facing in trading and those issues that are holding you back from achieving that profitability, right? Because most people, they're only a few tweaks away from achieving that consistent profitability, right? But they just need that accountability, someone to look from a different lens and say, look, you're doing this wrong, change this, this, and this. All right, it's very simple. Most of you already know what you are doing wrong. You just simply keep doing it. For some reason, you guys keep doing it, right? If you just stop taking those 10 trades a day and started taking 2 trades a day, you would have already become profitable a long time ago. So anyways, if you guys are interested in that, go make sure to check out all the links in the description. But other than that, guys, I hope you lot enjoyed the video. All right, if you did enjoy the video, please leave a like, leave a comment, share and subscribe. If you lot want to see more of these educational breakdown type of videos, let me know in the comments and I will start to bring them back. I have been doing more of the day in the lives and vlogs, kind of lifestyle content. But if you lot want to see that as well, I will start to bring them out on a consistent weekly basis. But other than that, guys, have a great rest of your day and I'll see you lot in the next one. Take it easy.